Oh, you guys can see me? Hmm. That's weird. Are you able to see my screen then as well? Because I can't see anything. It doesn't even say that I'm live. You don't see TradingView and Glassnode then? Okay, cool. All right, so I don't know. This is my first live stream, so what do you guys want to talk about? All right, I'll record it also. Hey, no no looking at that. See, I told you. All right, so, you know, the bottom line is we're sitting at 3,600 or 36,000 right now. Here, let me adjust this whole thing. I think it's all right. Yeah, so I guess we're at 34,000. Glassnode is saying 36,000 for some reason. I don't know if it needs refreshed or what it's looking at, but TradingView is saying 34,000. I'm actually just looking at it for the first time right now with you guys. Bear Stearns, is it a buy? I mean, where are we as far as the outlook? It's, as far as I'm concerned, we're in a, at the end of the day, we're in a defined downtrend and that's it. And people, asking for whenever the bottom is going to occur, you know, I think if if you remember back to the decline that we had in May going all the way through the end of July, it was nothing but down until it wasn't. And I suspect that, if there is a turnaround that, like a turnaround that doesn't happen, I don't know, a year or two from now, if it's something that happens where we turn around in like a year or whatever, it's going to be, we'll just go back and look, something like this, where it's a slow and steady increase. But I think if you're going to see a turnaround right now, it's not going to come from retail. So you're going to see it coming from some institutional type buyers, and then maybe retail will pick up on it. But it's going to be a rapid increase like we saw in July. I don't think you're going to just see some leveling out and then slowly moving up from there. I mean, black butterfly, I don't trade. So, I'm not the guy that you're going to want to talk to about technical indicators and all that because I don't care about that kind of stuff. I think that's a fool's errand trying to find a specific point where the bottom is. Um, you know, like I say on the show all the time, I DCA on Fridays. It's easy. I don't care where the bottom is. I don't care what happens today. It's why I haven't even looked today because I don't really care. I'm going to be DCAing on Friday, regardless if Bitcoin today is at 40,000 or if it's at 22,000. It makes it easy and it makes it less stressful. Am I buying? Oh yeah, yeah, I'm holding right now. I'm always so I guess that's something we could talk about. You know, what I do is when the market is, in a more defined downtrend. So typically what I've used is the 20-week moving average. And, we can just bring some of that stuff up. Sorry, I should have had this stuff ready to go. So my general philosophy is this, like it's, I don't know how many people are new or whatnot, but like we've talked about lots of times on the channel, at the end of the day, when Bitcoin is above the 20-week moving average, then in general, that's a bearish indicator. And now I say in general because, there have been times like, let's put it this way. I think a more accurate way to put it would be when Bitcoin is above its all-time high, or at least, not just getting above the 20-week and just going on a run like we saw back here in 2019. But like times like here, you know, you saw it get above this 20-week moving average and it literally just rode along it. I mean, you can see it just literally walks up the 20-week moving average and then it starts jumping up. Okay. So these are typically the times when you're in a bull market. And then when you get below, that usually indicates, and when I say usually, I mean for Bitcoin, it always indicates that you have rough times ahead. Even here, when we got below, sure, we got back above, but this was the most anemic, as far as crypto goes, this was the most anemic rally that I've ever seen before. We did get to an all-time high, but we got below that 20-week moving average. So you could have, it's like we've been saying for a long time, we wanted to see Bitcoin hold right here, and it didn't. This was December, the first week of December. So right here on, what is this, the 4th, we got below that. And I started making videos talking about, you need to watch out now. You need to watch out. And then, we went along the 50-week moving average and it was maybe looking like we could do something off of that. But once it fell below that, I started talking about this is a really bad sign. Because at the end of the day, if, I'll just show people that, if you're new, you may not know this. So in the past, anytime we've went below the 20, we've went down to the 50-week moving average. Anytime we've went below the 50-week, we've eventually gone down to the 200-week. Okay, so every single time, if you get below the 20, you go down to the 50. And then if you get below the 50, you go down to the 200. All right. Now the 200 moving average only goes back to, you need 200 weeks of data for that. So it only goes back to 2014. But every single time we've seen that below the 20, down to the 50, below the 50, down to the 200. All right. And it's when it becomes real suspicious when the 20 and the 50 get really close to each other. And then, it's bouncing in between like that. And we kind of saw that right here. Like the gap between the 20 and the 50 was almost non-existent this time. So, you know, I think the key thing to know about when something like this is going on, it's not related to Bitcoin because, this, we know this relationship. It's the relationship between what's happening when Bitcoin falls below the 20 or the 50 and starts heading down with relation to the altcoins. And the altcoins get absolutely hammered. And that's the thing that, I've been, trying to pound the table on since I've started my channel, because I feel like it's a constant battle because you have, out of, if there's 10,000 crypto YouTubers, 9,990 of them are trying to shill you altcoins every day. And I invest in altcoins myself, but I also, I have an appreciation that whatever I'm holding, I better damn well be ready to have it, run down to zero. because it's what we've seen numerous times in the past. The altcoins in the setting of a bear market get hammered. They simply lose pace, versus Bitcoin when Bitcoin's heading down. Um, how am I supposed to see? Like, I don't even know how it says viewers waiting 3. How am I supposed to see what's going on here? Um, no, because I wouldn't be invested in an altcoin if I didn't believe in it long term. So, they, even with that said though, ones that you can believe in, like a perfect example, we could bring this up. So, yeah, we'll have to find the right. This is a perfect example. This is, this is a coin that a lot of people believed in back in 2017. Yeah, I see it's working, but I can't see. I don't know how many people are in the stream, or I don't know where you guys are chatting at because. But anyways, someone's out there because I see you guys typing, so that's good enough. Um, at the end of the day, EOS is a perfect example. So, this is a one of these coins that people, really believed in and thought that it could, make some major moves against Ethereum. But if you just look at it, so, it had this spike in 2018, right at the beginning of 2018, just like everything else did. And look where we're at up here. So, here we'll put it on the weekly time frame. So, we were we were up here in January sitting at around what, a high of around $20. And this is another perfect example, just this whole thing, how this goes. So even though the market was crashing here in April, the market was doing one of these fake recoveries. So if we look at Bitcoin and what happened in April, you see there was this fake recovery. We bounced off the 50 and tried to come back above the 20. And so, of course, that's everyone's invitation to start shilling altcoins. So people are FOMOing into the altcoins. They think that this bounce was just like all of these bounces, but it wasn't. We were below the 20 week. And, that means that the momentum in the market is gone. And another thing we can look at here, to go with it. Okay, so what we're looking at is the total crypto market cap. All right. And we're looking at the on the bottom, I have the price times the volume. Okay. So that gives you it gives you a more fair look at how many dollars are being traded, which can be an estimate of essentially, how much interest there is in the market, because a lot of your retail traders are going to be driving, the exchange based um, volume. So this is a pretty good indicator of market sentiment at any given time. So you can see that in April, where is April right here, the price volume was, tracking down. And what was happening with, the market, it was being pumped up by who knows what, just probably just retail, because no one else was buying. So you have these prices going to these, extreme heights. So what, EOS got to $23, right? Well, the whole point is even though EOS got back to, or, to $23 right here, first of all, you could have seen that price volume was declining during that time. And in addition to that, um, in this market cycle, when it attempted a recovery, where did we get to? At best, so in May, it got back to a high of around $13. So it just it just goes to show, even if you think you're invested in a quality project right now, it doesn't mean you are, because I assure you, people back at this time, there was some major hype around EOS, and a lot of these different projects that you're investing in right now, just you know I don't want to bash anyone's favorite project, but a lot of them are just things that are here now because they're here and there's a lot of hype in the market, or there was a lot of hype in the market, and they're going to be gone whenever the next market cycle comes. If you're at break even, do I think it makes sense? Sol, Ada, I mean, honestly, that's one of those questions I don't like answering, because you know first of all, it's I think a lot of it comes down to some of the things I discussed in one of the prior videos. It depends on when you got into the market. You know, if you're break even for the entire market cycle, then you have to ask yourself what you think is going to happen going forward. Like I said, I don't try and do a lot of predictions. I'm very algorithmic in the way that I approach the market. It's just simply, are we below the 20 week? And if so, then are we below the 50 week? And then if so, and if we're below the 20, I'm cautious. If we're below the 50, I'm on red alert mode. And what that means is I'm just going back to my plan. It's, something like 50 to 60% Bitcoin, and then something like 25 to 30% Ethereum. Although, Ethereum, there are some things I'm getting a little bit concerned about Ethereum in the longer term. And then, I DCA into a smaller percentage of alts, but I'm not buying any altcoins right now. I'm mostly just doing Bitcoin and Ethereum, because, you know, if this continues, your altcoins are going to get wrecked. So to answer your question, you have to ask yourself whether you think it's going to continue. But all I can do is present the evidence, which is what I've been trying to do, and just showing we've lost a lot of. In fact, we can just measure this here. So let's look at like a 5-day. This is a moving average for price volume, because otherwise it's all over the place and basically unreadable. So our volume has decreased by, think about this. Our price volume has decreased by about 65%. So, you might say, well, oh, that's because the market cap has decreased. But that doesn't matter, because if the volume is, up with the declining price, everything will stay equal. So you're seeing, what that means is, if you have a $100 asset and there's one share of it traded, then your price volume is 100. Whereas if you have a $1 asset and there's 100 shares of it traded, your price volume is still 100. So they're equivalents. So it's a way to look at, things that have a different value and assess how much, this doesn't tell you whether it's buy side or sell side volume, but it simply tells you, or, if it's net buy or net sell volume, but it simply gives you an idea of how many dollars are being traded. And what you see in every time that we reach a market cycle peak, you see declining price volume. There will usually be a spike, but overall it's going to be declining volume. And this only, the total market cap only goes back to 2014, but you see this is 2014, and the we all know that was a bear market coming off the 2013 market cycle peak in whatever it was, November or December of 2013. So you're seeing declining retail interest in the market. You're seeing a position where we're below historical price levels that are levels of, typically when we're below those levels, the price just plummets. And, the price is doing exactly what we might expect it to do. So in my opinion, I think we're going to keep going down. Now, like I said, for me though, I'm willing to be buying Bitcoin and Ethereum right now and sit on them for a loss for 4 years. That that's to me, that's okay, but that's because of my situation, and you have to assess where you're at, and that's why it's difficult to answer questions like that. So, I'm sitting on the altcoins that I have, but I'm okay with taking a loss on those over multiple years. So I know that's not the answer that, some perfect answer for you, but that's kind of how, I think about it. So I guess at the end of the day, what I'm saying is if I was not all right with sitting on a loss, then at minimum, I would be, you know, de-risking that position to some degree. Not some alts, almost all alts. So you said some alts never recover. Almost all altcoins, 90% of altcoins, you know, if we look here, so let's look at the historical snapshot of altcoins, and we'll go back to what? Let's go back to 20. Let's go to January of 2018. So let's see. Bitcoin got back, Ethereum got back. So we're looking at near their all-time highs here. Bitcoin Cash, $2,500. Okay. Cardano, 80 cents. Cardano is one of the ones that did get back. Litecoin, I don't know. Litecoin, I don't, like stuff like this is just garbage to me. I know a lot of people own Litecoin, but I haven't looked at what the price of Litecoin was in probably, I don't know, 3 years. Um, NEM, so XEM, it's $1.39. I don't, just look at this stuff like Stellar Lumen, 63 cents. And I'm pretty sure that a lot of these had even higher, blow off tops than what we're looking at here. Neo, you had things like Nano, $22. And I think Nano even went up much higher than this. So you had a bunch of this stuff that, hasn't even gotten close to getting back to some of these levels. And, I don't even think we're looking at a lot of these, the actual all-time high here. So, but I mean, and, several of these you've probably never even heard of before if you're newer to the market. So, there's a lot of this stuff that, especially once you start getting down into these levels, like V chain, $6. So, I mean, you just have stuff like this that most of these are, I don't even know if these exist anymore. I'm not one of these people that's out here that I know every single thing about every single currency because, you know, a lot of this stuff is just junk. Like even today, if you look at like the top 100, I would say 90, 80 to 90% of the stuff in the top 100 today will probably not even exist in 5 years, or it will still exist, but it will be, vaporware that people are still, trading for a few pennies. Bitcoin gold. Yeah, that's a good one. Imagine if you missed out on Bitcoin gold. 200 in normal market cycles, 200 week would be a major support. Yeah, so what's it say? In scenario of economical crashes in global markets, what line of support? Yeah, so I mean, that's what we don't know. It's easy to it's easy to look at, Bitcoin and say, hey, so if we just, let's just zoom out to like the 1 month level so we can see everything. So, it's easy to sit here and look at the 200 week and say, yeah, that's a nice level of support for us in these bear markets. I hate to break it to everyone, if you didn't see the video from yesterday, these aren't bear markets, any of these. These may be relative crypto bear markets, but even then, I don't know that you can call these any of these bear markets. We're talking about, okay, so in January of 2013, we were trading at what? Let's see, where are we? We were trading at, God, what is happening? In January of 2013, we were at $21. And then if you come look at, January of 2015 in the supposed bear market, we were at what, 300 and some dollars. So these are only bear markets if you compare them to these phases. And these phases are built on nothing. They're built on nothing but a bunch of people that are coming into the market and speculating. If you're concerned about the price, and we can just look at this here. I think I need to put it on the daily time frame. Or maybe not. I don't know. I think maybe that worked, but so so, realistically, this is probably a more fair estimate for where, the price actually is worth. Because, it might not actually be that low, but I really don't think like this green line, for instance, is, the true value of the asset, because these times, like right now, we're at a price that was built up on a bunch of people that aren't investors. They're not actually investing in the asset. They're speculating, they're coming in and then they're getting out. So, these are the periods of time that are built upon the backs of people that are long-term investors, that will be in the market regardless of, what's going on elsewhere. And so, like I said yesterday, if you go look at the NASDAQ composite, we've done nothing since we said that, July is the first data that we have for exchanges for Bitcoin. And, we have done nothing but go up in that time period. So we have never experienced a true bear market, because this 200-week moving average, I don't think that if we actually head into a bear market, that 200-week is going to be, I don't think it's going to be the actual line of last defense. I think it could get ugly in a way that people can't even fathom right now. Like the type of wealth evaporation that, that people just can't even comprehend. It's like, being in the stock market. Imagine being in the stock market in 2000, and it's the stock market. It doesn't go down 75%. Like that just doesn't happen. And it did. It did it in a year and a half. So if we have in the crypto market, if you have this position where we see 85% losses all the time, what do you think will happen if, if the actual market goes into a bear market? And the other thing is that people don't understand is, in the setting of economic uncertainty, people ditch their risk assets. Bitcoin is a risk asset. So no one's going to be, people are going to be ditching their risk assets and moving into, and when I say people, we're talking about, we're not talking about our friend Mike that we know. We're talking about, guys on Wall Street, like, institutional type investors, people that are as individuals, institutional type investors. They're the ones forming the backbone at these levels. But I assure you, if they've been in the market since whenever, since, 2015 or 2017 or sometime like that, and the market starts looking rough, well, oh, guess what? How about I cash in you know, my 20,000 or 10,000 or even 1,000% profit that I've made over this amount of period and move it into some safer asset so that I don't lose my ass over the next, um, 3 or 4 years while we go through a bear market. So if your backbone starts dropping out, where does that leave you? And people don't think that that can happen, but the only people that don't think that can happen are people that don't know the history of markets. So it's not to say that like I said, I'm not saying that that's going to happen, but a bear market in the general economy will happen at some point. They happen, they just do. And when it does, you know, this stuff like, you know, you go on your top 100, things like, I don't know, Safe Moon. Like, I don't know how, maybe even Safe Moon might be a better investment because the only people invested in it are, people that have just put in 50 bucks into it for whatever. But in something like Bitcoin, you have real, we're talking billionaires here. They are forming the backbone of the asset, and those are the people that have been investing in it for years now. So when they are seeing, significant economic uncertainty on the horizon, they're going to act accordingly. And people that don't think that that's going to happen are just, I really think they're fooling themselves. Yeah, I mean, the market, I mean, I don't know, the markets, we could take a look. I personally like looking at Nasdaq, um, because it's a little more receptive to swings. It reminds me a little bit more of crypto um, than some of the other indices. Like the S&P just I with that said, the S&P looks like crypto also. I mean, just look at this. This is insane. Like, just for literally, we've just been doing this now for what, going on since 2009. So 13 years, we're going on 13 years now where we've been just doing nothing but going up. But I mean, there have been some fair corrections in here, but these have all been, relatively smaller corrections. And what's interesting is, if you look, when did the crypto bear market start? It started right around the time back in 2018 when the general market was showing uncertainty. Okay. So, I don't know. Sure, maybe it wasn't, like that as much back in 2013, but the market back in 20, comparing the market in, 2010 through 2013 to the market in 2017 to now, they're just completely different animals. So you have to think about it like this. Who's investing in the market now? It's me, it's you, and it's a bunch of institutional investors, and it's, hedge funds. They're starting to get in. And so what does that mean? You have the same pool of people investing in crypto now that are investing in the S&P and that are investing in ETFs, these kind of markets. So you're going to see naturally, when you have the same pool of people playing the game, the fields are going to start to look the same. So I think that's what we're starting to see. That's why if you go back to like 2013, you kind of didn't have that as much. That's why there was this, a certain level of dissociation between crypto and the general market. But I think you're going to start to see things become very similar. Yeah, I mean, what, S&P's down 3% today. I mean, that's like 15% in crypto. Like, these moves here in the stock market are, they're panicking just like we panic. They're panicking right now like we panic when things go down 40%. That's how this, you know, 9% drop in 2 days is for those guys. So, yeah, I mean, let's see where the moving averages are. So, this is the other thing. Like, yeah, so we're below the 20. That's the first time that we've, had a significant close below the 20. I mean, we've been down here and, had some wicks below it. We've even closed below it, but I mean, it's been within, the, it's been within, what we were within just a percent or two, not even a percent of it. So now we're below it. I mean, just official that we're below the 20-week moving average. And let's put on the 50 as well. So we're below the 50. All right. And let's take a look. Let's take a look at like the last time that we've, all right. So right here, we went below the 20 and the 50. And what happened? So, let's just look at a date range here. So the next time that we got back to this level was, all right, 330 days later. So we were trending sideways to down for a year. All right. And this is the thing I always say on the channel. I never actually show it. I say it all the time. But it's when when you go below the 20 and the 50, even in the general market, it typically leads. So here, again, we went down, we got above, but it was, just for a short amount of time. Then we were right back down. We didn't consistently get above and stay above until out here. So about a year again. And same thing here. When we got below, we were looking at until we got back to this level and stayed above that level. We were looking at what, 3/4 of a year. And then, so, I mean, this is, here again. I mean, it just happens every time. Every time you're below these particular support levels, it means that something's going on. It doesn't mean nothing. Let's put it that way. Every single time we get below these levels, here's another 3/4 of a year. Now, this has been all these things I'm showing you here have been, other than these two, have been in the setting of a, and this one we all know COVID, like, that's a black swan event. And this whole rally right here was, courtesy of the Fed, which I did a video on yesterday. Which, by the way, it's funny. The importance of the video that I make is directly, it's 1 over proportional to the number of viewers. The important videos no one watches, and then the crap that doesn't matter, everyone wants to watch. So, what's up, Codex? So yesterday, if you guys haven't seen that one, I would check that one out because that will tell you exactly, how there's um, just a bunch of fake, just propped up money in the market right now. And they're literally actively pulling that money out now. That's the thing people don't get. They're pulling that money out in order to fight inflation. Because when the Fed adds money into the market, 66 watching. Yeah, I don't know how many are watching. I can't see. 66 more than I would have guessed. Well, 65. I knew you were going to be here. So, the Fed, they are the one, they go out and they buy these assets. And so that, pumps liquidity into the market. And what that results in is increased, money supply. That's how your money supply increases. So they pump the money into the market, increases the money supply. And at the same time that you have your increasing money supply, the way you get inflation is when increased demand for goods and the economy can't keep up with the level of production can't keep up with the output or with the demand. And that's how you get inflation. So you have more money, but less goods. So prices go up. And that's in a typical situation. In this situation, we have, with COVID, you have more money and you have way less goods because the global supply chains have been shut down. So, that's how we're seeing hyperinflation that we're seeing now. And to combat that, they have to remove money from the money supply. And so they're literally pulling money out of the market. They bought all these things, now they're selling them to try and, remove that remove that from the money supply in order to combat inflation. So I think you're going to see this continue. I don't think MicroStrategy will sell at all. So my strategy is always identical, and I've touched on this a little bit earlier. But when we're in a bear market, I think of it as there's basically two phases for me. There's actually do I have Glassnode up here? I can show you. So okay, so I don't know if this is one I should be trying to show on live stream or not, just because of um, yeah, screw it. I'm not going to talk about that on live stream, but I'll just walk through with you in general. Um, so what happens is, and this is related to my strategy. That's why I'm going into it like this. When during the setting of, the times when we're below the 20 or the 50-week moving average, what I do is quite simply, I'm buying Bitcoin and Ethereum. And the reason for that is that, as I've showed many times in the past, when they're below those levels, the market trends down. So not only does it trend down, the altcoins are going to go down significantly more than your Bitcoin and Ethereum are going to. So that puts you in a position where, you know, if you're holding altcoins, and as an aside, real quick, people in their head think, if I tell you something is down, as an example, let me just show you this. So if I tell you Cardano is down, you know, uh, let's do date and price range. So if I tell you Cardano is down 92%, right? And then, people are like, oh yeah, that's bad. And I'm like, well, it may go down to 96% or 97%. And that sounds to people like that's the same thing. But okay, so we're at, let's go to like something like down 80%. 80% and 90% don't sound too different, right? Well, 80% puts you at around, um, sitting at a cost of around 28 cents. Okay, so in other words, you would need to, what? You would need to go up basically 4 or 5x to get back to this price. But if you go down 10% more, down to 90%, now you're looking at around 12 cents. So now you need to 10x. So that 10% drop that you took from 80% down to being down 90%, that's not an insignificant thing. Like people are always like, oh yeah, what's the big deal? What's the difference between 90 and 95%? Well, it's huge. Because then if you start going down to 95%, okay, well, now you need to 20x to get back. And then if you go down to like where it actually goes down to, okay, well, now you need to literally, you know, going on the order of 60x or something like 70x to get back to your prior all-time high, which Cardano did, but many of them don't do that. So, holding on to these alts like this, when they're down, when you're down 75%, if you get down to, 85 or 90%, there is a, statistically, there is a huge difference between being down 70% and 80%, et cetera. So to get back to the main point though, that's why I don't buy altcoins during the bear market. Um, at minimum, I don't buy them until, I think we're actually nearing a bottom. So once, in my opinion, that we're, probably the bear market is running out of steam, then I think there is some utility in picking up altcoins, because that's where your potential upside is becoming massive. When even on some of these junk coins, like things like, even like, EOS, for instance, once it got down to some of these lower levels, you know, the upside potential that you had even into this market was huge. So you never want to be buying like right now, because if we head into a bear market, whatever Ethereum or, Cardano, wherever we're at right now, 99 cents, that's just the beginning at the end of the day. It will continue to go down significantly from there. So the bottom line is I buy Bitcoin and Ethereum, mostly Bitcoin, something like 60%, 50 to 60% Bitcoin. And then as we get down further and further, then I may start picking up some altcoins. And the next question is, well, which ones? And, I like Solana. That's, one of my favorite coins. I do think that it has a legitimate chance to challenge Ethereum. I like Luna, Phantom, Matic, Link, Chainlink. I've talked about this before. Chainlink is, in my opinion, one of the ones that it just, the stranglehold that it has on the Oracle game is just astonishing. If you add up every other Oracle, they don't combine to equal, the value of Chainlink in terms of market cap, anyways. Won't be in the top 20. Shiba. A lot of them, I don't know. Probably a lot of them won't be there, because there's probably, like I said, I'm not one of these guys that's out here like reading about every single coin, because I try and, I take a very conservative approach. So I'm not someone who can tell you about some, micro cap that's up and coming, but there's probably a lot of projects that just aren't going to get any hype right now. Like, like some of these Polkadot projects, they may replace a lot of this stuff that's on the, I mean, we could take a look at coin market cap again, and just see what's on the list these days. And, if I offend someone, if I talk bad about your coin, I'm sorry. Don't worry. I'm not, I'm not going to be influencing the price today based on this stream, so you won't have to worry about it. So XRP, I don't know. I think it's insane to be, they're obviously in some never-ending battle with the SEC. So I'm not a fan of XRP. Cardano, I think I own a lot of Cardano. It's probably, I've talked a lot about it, but at the end of the day, Cardano is troubling. It's troubling at minimum right now. It. I think they have been so dogmatic with their ideals of, sticking to some academic level of preparation of their network, that, that's why academics aren't typically successful in the in the private sector, because it's just a completely different thought process. And in my opinion, it's better to throw something out there and get people developing on it than to go through this process where you're sacrificing you're sacrificing development for the hopes of perfection. Terra, I love Terra. Solana, I like Solana. Dogecoin, I mean, Dogecoin will probably be there. Polkadot. I actually, I really like Polkadot. Its price action has been terrible, and you know, but I think just the fact that you have these, at least the idea of Polkadot having these interconnected blockchains, because the future of the blockchain is not going to be like it is now, where you see, there's a Solana and there's a Luna and nothing communicates with anything else. It's just not going to be like that. So at least the concept of Polkadot, I do like that. Avalanche, I like. I don't know. The ones that are up here now seem like they're all good projects. So crypto.com coin, I don't know. Like this crap, people always ask me about this coin. Like I don't even know what this is. I've never like I refuse to even look up what it is, and if don't tell me because I won't read it. Crypto.com coin. I'm guessing it's like BNB. Well, I bought ADA because, you know, I I did not suspect that we would still today be sitting in a place where, there's essentially where, the big hype about ADA is Sunday swap. I mean, give me a break. If Sunday swap is you know, like I said, I own a lot of ADA. I'm into ADA, but I don't know. It's just troubling, and this can, the concurrency issue. I don't. It's tough, from my position to know what is real, what's a real issue, and what's just being overhyped. I think it's really tough. Um, I'm not a developer, and unless you're a developer, I think it's tough to really know that kind of thing until you see, like, until the rubber meets the road and we see products coming out. You have to assume that there are some issues going on. Imagine a public Ethereum. I mean, I like Ethereum, but it's the same kind of thing like Ethereum 2.0, or it's not called Ethereum 2.0 anymore. It's called whatever the heck it's called. I don't know. What is it? Does anyone know the new name of the, like, Ethereum Surge and Purge, Merge? And I don't think I'm making that up either. It's I actually think that it has like seven sub sets of its upgrade, and it's I know that they deprecated the name Ethereum 2.0 though. But we could take a look at the Ethereum chart anyway. Sorry guys, by the way, this is my first live stream, so I have no idea what I'm doing. I've never even really watched a live stream. So we're winging it here completely. So that's why you're probably watching the most boring live stream you've ever seen. I mean, I don't know what else I would do though. I could do a dance or something, but the merge, yeah. Yeah, I mean, ETH fees, um, like that's the whole problem. And I guess like when, the first whatever this next I don't know, it's the worst naming convention I've ever heard, but whatever this next upgrade that they're calling it now, I guess it's not even supposed to help improve the gas fees. Although if the price is $500, that will help the gas fees. Thanks, man. I appreciate it. Um, should we sell altcoins now? Like I said, yeah, that's a tough one to answer. But if the market keeps going down, the bottom line is that's going to keep happening. The price is going to keep for the altcoins. Everything's going to get hit, but the altcoins are going to get absolutely hammered. So you kind of have to gauge based on, that's my opinion based on, the data that I've laid out anyway. Um, and so let me just say this about these kind of things that I'm drawing. So I'm drawing a trend line here. So I just want to talk about this quickly. I don't, I'm not a big TA guy. I do think a lot of the TA is there's a basis for it though, because people either love TA or hate it. You have to remember what is the reason that the TA exists, that the technical analysis exists, and a lot of times it's because it's like I've showed with this volume profile visible range indicator that it's TA is not being formed by some. I don't know about some of this stuff there. If you watch crypto YouTube, there's some wild TA out there that I just look at the charts and it doesn't make any sense to me based on what's going on. But you have to think about, when we look at the chart here, we're not just looking at prices. We're looking at a series of levels where individuals, across the entire market have decided, their interpretation of the value at that level. So a lot of TA is simply based on the fact that, when we say these support levels, it's based on the fact that, statistically speaking, there are more likely to be a group of buyers at that position that will not be putting their asset up on the market. So, when you have those levels, this leads to a place where, statistically speaking, again, it's going to be more difficult for the price to move past that level. That's why, 30,000 can be considered for Bitcoin a almost a keystone level, because you have this group of investors at that level. It's like I said in the video the other day, there's no way in hell I'm selling you my Bitcoin for $30,000 or $35,000. So that's like what a lot of the TA is. It's simply that. It's identifying locations where statistically it's much less likely for the price to drop below that level. So, I don't get into a lot of the chart patterns like head and shoulders. I, you know, I don't, I've seen people draw it and it's like, okay. And I'm sure, maybe they're on to something, but it's like, I don't get into that stuff. I just don't care about it because I don't trade. I dollar cost average on Fridays, guys. That's it. Bitcoin and Ethereum when we're below these levels. So a lot of this other stuff, I'm simply, kind of just showing you what, in my opinion, the trend is doing. And this is one thing I do believe in are these long-term trends. Typically, when you break below these longer-term trends, like we see here, those indicate that something's going on. And, we could see some others, like if you go back to in this cycle, you have a longer-term trend where, you got a love magnet and you got a hate magnet. You have this longer term trend. When you break below it, well, once you're below this trend, you're no longer on this path that Ethereum was making to the upside anymore. And so you've lost that means you've lost key support levels. And that's why we see the prices crash through these levels often. And you can see that we've lost this key trend level that we'd been making since March, essentially. And we've lost this trend line now with, respect to almost every asset. And we did that in December. So, I don't even remember what the question was anymore, but sorry. I know someone asked me something before I started talking about this. Yeah, my concerns long-term with Ethereum are simply this. Ethereum was the only, it's like, how can I was telling everyone in the Discord the other day that I'm worried about doing a live stream because I say things that I have to edit out of my videos that I make for YouTube because they're just not appropriate. And that's why I'm trying to think of an appropriate analogy right now. So at the end of the day, one of my biggest concerns for Ethereum is the fact that it's competitors. When you're the only game in town, it's easy to be, run up to these ultra high valuation levels. But when you start having competitors that can do a lot of the things that you want to do, well, what do? You have a bunch of, you have a bunch of junk built on your network that currently a lot of the things built on everything in crypto right now are at this point in time, in my opinion, junk still. They're just like just things that exist because people like to, invest in crypto right now. There's, for instance, like the gaming side of crypto. These aren't games. These are like, I don't know. Like I don't know if you guys know, but I'm a gamer and I wouldn't touch any of that crap. And I don't think anyone I know would either. Um, it's not to say that, nothing can be built on in the future, but what I'm getting at is Ethereum has a bunch of these apps that are built on it that are questionable at best in terms of quality. And so when you have competitors that are doing a lot of the things you want to be doing in the future, then it's like, well, why would I buy Ethereum with a market cap of, whatever, I know it's less now, but what it was 500 million or more. Why would I buy that when, there's these up and coming blockchains that are doing a lot of things in a quality way that likely, other than the fact that Ethereum has more junk built on it, what else does it have? What's the probability of us going into 2000 like bear market? I don't know, bro. If I knew that, um, I would be somewhere in New York in a skyscraper right now, not at my house. Do I short? I mean, I'm not against it. I'm not, I'm bullish on crypto, but at the end of the day, I'm investing here. You know, my whole my whole reason for being here is as an investor. Um, it has nothing to do with, some philosophical belief in cryptocurrency. I do believe in it, and I do to a degree have a philosophical belief in it, but I can't blame anyone for shorting. So, personally, I don't typically, but I mean, I do have some margin account somewhere with a few bucks in it that I don't think I've looked at for like a year. So and we're talking like 0.1% of my portfolio value, and literally, I mean like 0.1%. So it's just something to mess around with. So yeah, maybe I'll short something, but it's not to any significant degree. Like I wouldn't be going like 10x or 20x, shorting Ethereum at $2,200, 25x leverage. I mean, maybe I would, but it would be with, like I said, 0.1% of my portfolio just to, but then again, I'm going to Vegas next week and I'll also probably, I'll burn some money on the blackjack table then too. So I'm into gambling every once in a while. Yeah. The, no, yeah. I mean, well, so, you know, no black swan event, but true in its truest sense. But the fact that the Fed is removing money from the money supply to a degree is kind of like a black swan event. It doesn't happen very often. It's something that happens very rarely. And, it just boggles my mind, man, that this is the stuff that I've been saying, you know, for weeks now, talking about, well, we have the Fed raising interest rates. And I guess it's on me that I didn't elaborate further into what that actually means. And, but this is a learning process for me too. I'm just starting this. This is, I'm not an educator. So, you know, I'm new to, talking with people and trying to understand, whatever their issues are. And I'm trying to grow in that respect. But a lot of this stuff is new for me. It's like, like a perfect example is my model that I put out, you know, like I talk about when I made it for me. I didn't have the intention of starting a YouTube channel. It was just it just sort of happened one day, like literally on a whim. It happened one day, and um, that model I had to present that model in a way such that it could be consumed by the general public. And so I had to make the decision to, set a 100 and a 0 level on it. But it's not constrained by 100 and 0. That's just how I had to make it so that it could, so that people could, use it. And Solana has gone below the 0 level, which is kind of like, when I first started the model, I kind of said that you have to be, first of all, these altcoin models are, they're very, very suspicious at this point, simply because we have what, the altcoins, a lot of them came out, like in this area here in July 2020. So we have, once I released them, whenever that was in October or whatever, we had about 365 data points, which, that's pretty suspicious right there. And, sure enough, Solana in this cycle, and I'm sure some of this other stuff will go below as well. And then I'll rework the model and, it will be better next time. But that's kind of how these things go. Just learning the process of how to communicate with people and, understanding what I know what my fears and concerns and, pitfalls that I've run into are, but I don't know the experiences of everyone else. And I'm not someone who like uses social media often. So a lot of this is all just, I'm in a completely new realm here. So like, seeing the concerns that other people have, the things that you guys are worried about, it's all, a learning experience for me as well. What is better than Ethereum? I mean, I don't know that anything's better than Ethereum. There's just simply things that and sorry if I'm missing your comments, by the way. This is, like I said, this is my first live stream, so like trying to talk and then come over and there's a wall of text and trying to figure out but what's better than Ethereum? Like I don't know that anything's necessarily better. It's just Ethereum, has these gas fees. That's unsustainable. There's, you know, other things to be concerned about, I suppose, that, you know, um, and so it all comes down to, if anything's better. I don't think anything's necessarily better, but there are things that are competitors that are, might be faster and might be able to scale more than Ethereum. And at least at the moment, now with 2.0, who knows what will happen in 2.0? I guess we'll have to see. But at the moment, like, I don't know, just think there's things that aren't necessarily better, they're different. So, Solana, Polkadot, things like that, that are just approaching the problem in a different way. And you don't know who's going to come out of the other side. In fact, it might not be Solana, it might not be anything that even exists right now. I mean, the other thing that's worth mentioning quickly, let's talk about social media. So let's talk about how did social media, like at its core, and maybe there's something before this, but go back to, there was MySpace and I don't know, High Five, and maybe High Five is still used internationally or something, but there was all this stuff. But now it's basically, you know, you have Facebook. It runs the show. That's it. So, if let's say that we were investing in social media platforms back in sometime whenever that was, like the mid 2000s or mid like 2010 or whatever it was, you know, you don't know who's going to come out on top. You can suspect who it's going to be, but you know, MySpace was first, and for a long time it was much bigger. And then, how did it go? Well, it got bought for what, $500 million, and now I think they're trying to sell it for, pennies. Watch gas fees on layer one is the only way to sustain a blockchain. Watch Bitcoin go to zero once the fees aren't enough to keep the network alive. Yeah, I don't know, man. Maybe. I mean, I've heard that theory, and maybe that's true. I guess we'll see. But when is that going to happen? What year is that? I mean, how many iterations of the halving do we have to go through before that happens? It will be $1. I mean, I doubt it because you don't think someone will pay what $42 million the entire for the entire you don't think a billionaire just as a just for the lulls of it will buy all of Bitcoin for $100 million? So you got to at least give it $4, $4 or $5. Yeah, but that's the so Bitcoin. I would be more worried about. Um, I would be more worried about Ethereum with to relate it like that because Bitcoin doesn't. Listen, I'm not a Bitcoin maxi. Let's just put that out there. I don't have any emotional level attachment to Bitcoin. I don't give a crap about Bitcoin. It could exist or not exist. In my opinion, it's the most stable investment. And it's not only my opinion, it's the opinion of many billionaires out there as well. You don't see millionaire or billionaires just like FOMOing in left and right into you know, pick your altcoin. It's not to say that they're not investing in them, but if you want to talk about I don't know about you guys, I live in 2022. I don't live in 2040 when Bitcoin might go to zero. Okay. I mean, that's like it's a worthless conversation to be having right now. I'm not invested in Bitcoin to I'm invested in Bitcoin to hold it until the next market cycle peak when I'll do exactly what I did this time. I DCA'd through the bear market and then I started dollar cost averaging out probably right here, probably right around what here. I start dollar costing average, selling. What am I even looking at here? No, it's Ethereum. So, you know, this is, yeah. So, dollar cost averaging through what's happening here. Trading view has been 2020. That's all it wants to show me. Am I on the wrong? I'm not, right? All right. I guess Binance only has, well, anyways, you know, dollar cost averaging probably starting about right here and then all through this market. And then what, right about here is where I start dollar cost averaging out. And then, I was out of all of my Bitcoin in, or, out of the majority of it, I think by the beginning of April. So I was out of around 60% of it by February. And then by April, I was out of the majority of it. And then I started reacquiring again here. So talking to me about Bitcoin in, 20 years from now, I don't really care what happens to Bitcoin in 20 years from now. But, um, the point I was making though originally is the fact that Bitcoin is seen as a store of value. Okay. So I guess the original goal for it was, it was to be a currency. Well, then we realized, oh, that's not going to happen. So it's a store of value, and that's how people view it now. But nothing else is viewed as a store of value in the crypto space. So whereas Ethereum may be analogous to Facebook in that way, Bitcoin, in my opinion, is not analogous in that way. It's simply, it just, Bitcoin is sort of stands on its own in terms of its, what it's being viewed as an asset. Whereas Ethereum is being viewed as an asset in terms of, more, Ethereum's being valued more like something, like a network. You can think of a social network or a cell phone network, like we've talked about before. Bitcoin, just isn't being viewed like that. Ethan, I don't know, man. Ethan, the next 4 years, that's that's you know the That's the potential $3.45 million question right there. Because, if you DCA heavily into Ethereum, through the stages of the bear market, and then it runs up next cycle again, if we continue the trend that we've been on, that would be great. But we've seen Ethereum growing on the same scale as Bitcoin. If you line up from the points where they both started having 100,000, active users on the network every day. If you put the charts over one another, they line up almost perfectly. But like we said, Bitcoin's being viewed as a store of value, and Ethereum is being viewed as, more like a network. So I think you're going to start seeing them valued in different ways going forward. So long story short, I think that Ethereum is going to keep going up, but it's I'm less. I have to say I'm less certain of that this cycle, from this cycle into the next than I was back in 2018. Yeah, Link. I really like Link. And that's I don't. Sorry, I have no idea how many people are on or, still here. So I don't know if I see there's some messages, but I don't know how to see if anyone's watching this. But if anyone, if anyone's new here, I could show you this quickly. You always hear people talking about Link. Oh, it hasn't done anything this market cycle. Like whatever. Link, let's take a look. Link was up, you know, 36,000% from 2018, right? And let's just go not even to May, forget May. Let's look back into the middle of 2020 when a lot of things hadn't even moved yet. Link was up 14,000%. So yeah, no wonder Link hasn't gone up, quite as much as some other things this market cycle. If if you're if okay, who's holding the majority of all of these things? Because if you think that crypto is decentralized, you're fooling yourself. It's not. Almost every one of these assets is held by, if you look at the top 100 wallets or something like that, almost every single one of these is being held by, 100 wallets hold 90% or more of almost all of these assets. I don't know the specific number for Link, and sure, maybe it's slightly different than whatever I just said, but these are centralized assets at the end of the day. Um, and if you're up 14,000%, or hell, let's even say, let's say that you bought the top on accident. Whoops. Okay, well, now you're up 1,500% by June. So, you know, you have to remember these guys own, it's not like, they own, they don't own 10,000 shares, they own millions of shares. If you're up 1,500% on millions of shares, what are you going to do? And what they're going to do is sell it. So when it goes up like this, when it's up so much in such a short amount of time, it's why everything runs out of steam eventually when they get up here, because the guys on top are selling it. Why wouldn't they? You would, I would. So, Link, everyone gives it a hard time for not doing anything, but it didn't do anything because it made the move before everything else did. It had its, it had its bull run while other things were still, while like Cardano was probably at 10 cents at this time. Um, just, yeah, I mean, look at this percent difference. So, you know, like Link was up 16,000% at the time where, Cardano was up 1,800%. And back at this time when we were talking about right here, so prior to the actual bull run starting, this is where Link was up. If we just bring it back out to here, Link was up what 5,000% at this point. Cardano was down 20. It was down 20% at that same time. Or no, it was up 5% right there. So you had one asset that was already made a move of, let's see, already made a move of 4,200%. And then you have another one. Actually, Cardano might even be down. I don't know why it won't let me. Yeah, here. Yeah, so, okay, Cardano was, I don't know. It's not letting me adjust the scale. I thought all you had to do was unlock it, but it's not letting me. Anyways, you can see the stark difference. Like, Cardano was either down or, up a few percent, while Link already in the beginning of, or, the middle of 2020 had been up thousands of percent. So that's the reason that Link then didn't do much into the market cycle, because it had already run up so far. Yeah, I don't know who Chico Crypto is. And, as far as news, like, I don't know. I don't really watch the news or listen to the crypto news because, um, it's, it's not like I ignore it, but do you, I mean, the news just gets people annihilated. I don't know. There's so much stuff on YouTube that's just like, man, people saying stuff, just nonstop saying stuff. And it's all like, like channels like, I don't know, technically it's a good channel, I suppose, because they relay it like it's news, but they also relay it in a way that they're like hyping it up, is like altcoin daily. Like they relay the news, but it's like they sensationalize it. So it's like you have like, I don't know, I can't think of a good example off the top of my. It's like the TMZ of crypto or something. It's just like, all right, man. Like, and people then react to this news, but it's already priced in, because guess what? Like money makers in these markets aren't getting their information from altcoin daily. Like they already know about the information by the time you're seeing it on there. So, they put it out there like it's like, oh, this thing could, go parabolic, and it just never happens like that. Anyways, guys, I have cleaners just came to the house, so I'm gonna go because they're making a lot of noise upstairs. So that's gonna be it for this one. I'll answer one more thing and then I'm gonna take off. Do you think that Bitcoin dominance will soon grow up even faster in its last moment? Um, yeah, I think Bitcoin dominance is going to go up, at least in the shorter term. And, um, oh yeah, sorry. And just to answer this other question, yes, it is. That's what I said. It's like this for every asset. The top people own the vast majority. You know, I guess I can. They're not doing whatever I thought they were doing, so we could wait a few minutes. But um, they own the top of every asset, um, or most of them anyway. I don't know. There might be some more decentralized than others, but the whole point is that's why, you just made, when we run the price up like this, congratulations, you just made 20 billionaires that, owned the project from the beginning. So what the hell do you think they're going to do? They're going to sell it. Why wouldn't you? I mean, I'm not going to, if a lot of these people are just guys, they're just guys, just regular guys that, had an interest in this thing. And then they, some of them were, a lot of them are probably developers, that maybe were living on, you know, a couple, maybe making 100,000 or a couple 100,000 a year, living a decent life. But then once they, make a project like one of these and the price goes up, 1,500%, 3,000%, 500, 5,000%, what the hell do you think is going to happen, man? They're going to sell it. they're literally worth hundreds of millions, if not billions of dollars at that point. And like, so people are just shocked when these things happen, but it's like it the person who owns all of the asset is selling the asset. So they're waiting for, for these runs that happen and then they dump it. It's not to say that you shouldn't invest in it for that reason, because, you know, you can partake in the wealth with them. It's just, you can't be a sucker and buying up here. And it's just obvious. Like, when something is up thousands and thousands and thousands of percent within these short amounts of time, only new people and people that masochists buy in these ranges, because the prices are just so run up, and you're sitting on a ticking time bomb, because people who own millions of that thing that you're buying into, they own millions of it from the time that it was here at 11 cents. So, that's to answer that question as to, and yes, that's for essentially everything. And then what was the other question was, yeah, Bitcoin dominance, I think, will continue to go up so long as the market continues to show weakness. And based on everything we know right now, what color McLaren? It's blue. Based on everything we know now, the market is showing, the general market is showing a lot of weakness. And like I said in my video that I made last night, we've never experienced an actual bear market before. So things could get exceptionally ugly if we, in fact, do head into an actual bear market. So we could just see, oh, by the way, this, I'm going to put this out today. I want to see if I can make this on the weekly time chart. I think I can. So this is the upper logarithmic regression band, and maybe, yeah. So I think I can only show you the projections on the daily time chart though. Yeah, so this is the weekly, the log regression curve and the realized price log regression curve. And if you don't know what the realized price is, it basically shows you where the actual average price that individuals are holding the asset is at. Based on so if you bought Bitcoin at $100, it gets recorded as being $100 was invested into Bitcoin. But then if you sell it at $60,000, now, a true $60,000 or $59,900 in this case was added into the asset, because the person who bought it at 100 put a physical $100 in to buy it. And then when they sold it for $69,000, now a physical $69,000 was was added into the asset. So I think my math was wrong in that first subtraction I did there. But so what it does is the realized price, it shows you where the true level of the asset is. Okay. So it's a very close estimate as to where the true value of the asset. So you can divide by the number of coins and then get a price. And that tells you where the average price that people hold Bitcoin is at. And actually, I can just show you that on Glassnode. So you can see that right now, the realized price is around $24,000. Okay. And the way the realized price works, and this is another sign, a more bearish sign, I would say. The way it, works typically is it flattens out. You see that we have these long periods of flattening, and actually we could, we'll just do it here. You have these long periods of flattening, like we see right after. So, we have these parabolic runs. The old hands, so the people holding the asset for long periods of time, they start to sell it. Okay. And when they're selling it, the average price obviously becomes higher. And then when the actual price goes below this realized price, so the orange line, when that happens, the asset is actually at an aggregate loss, meaning the average price that people hold Bitcoin, the real price is lower than that. And so, these are times when, on average, the entire network is at a loss. So these are historically the best times to be buying, right? And it flattens out just like it did here and here, and then it goes on a parabolic phase. Like we go right about here, we start to make the move, right? And notice that during the bear market, actually, the average price doesn't change a lot. So, it's at like three 350, and then at its worst it gets down to about 300, and then here it was at 5,000, and at its worst it got down to around 4,400. And so we are currently in one of these flattening phases where, if we just look at the more current time, we had our parabolic move like we saw back here, and now we're just sort of leveling off. So the average price has sort of met an equilibrium point at around $24,000. And so what I did was made a logarithmic regression curve for that. And if you go into this, so this is the so it's labeled here the realized price, and so I made the log curves for that, and then this you can then project out into the future. So you can see where this log curve will be at some point in the future. And I'm going to be releasing this today. I've actually cleaned it up in a different script, but I haven't saved it yet, so it'll be a little bit cleaner than this. And so these are the realized price log regression curves, and then you can combine that with the actual price regression curves. So not looking at the realized price, which is a Glassnode metric, but looking at the actual Bitcoin history price regression. And what you see is that at least like we said, in the market in the conditions that we're currently experiencing, the price tends to stay in between these lower regression bands during the bear market, and then it stays within this higher regression band during the bull market. So you can then project that forward to kind of see where we may be at different points in the future, and just to show you, if you went ahead to, like, if you assumed that we were on 4-year cycles, which I think is very questionable, but the upper band puts you somewhere between 170 up to 320,000, and then the lower band is right around here at around 60,000 up to around 103,000, which to me, these insane numbers that you hear people say all the time, like people talking about 300,000 this market cycle, that to me did not seem realistic at any point in time. And I think even these upper bands tend to overshoot, because I think there's more, it becomes more difficult once you get in these higher numbers. So I would not be floored if if these upper bands sort of turn down further and we're a bit lower. But I do tend to think that the lower bands are historically very accurate. And in fact, I did a video showing that if you only took this information right here, this lower regression information, and ran the data for only the days from 2010 to 2012, you would get nearly the identical lower regression band. It's just been that predictive, like even dating back to our original market cycle. And so a lot of it, I think there is some predictive ability looking at these lower log regression curves. The upper bands are certainly more dubious. Yeah, but just because it's never went below the prior market cycle top does not mean um, that it can't. Like, if we get into a, yeah, here's an example. Bitcoin has also never went within, 50% of a prior market cycle peak, or, what, 1200. Yeah, I mean, we stayed like 2 or 3x above. So, I mean, there's all sorts of firsts that will happen. Like, I guess that goes with the idea of diminishing returns, but with diminishing returns, you also expect that, the potential that we get back to a prior all-time high will be within the realm of consideration at some point, simply based on the way that, and diminishing returns in itself will only be a thing for a certain amount of time, because, at some point in the future, your market reaches an equilibrium point and you're no longer talking about being in a place of, um, you know, multi-hundred or 1,000% growth each market cycle. So market cycles can, move closer to a place where they resemble one another. What's the WE? Selling your, am I going to keep doing the strategy of selling Bitcoin by Ethereum and other altcoins? Oh yeah, I mean that's I'm just always going to do that strategy. I mean, it's not just a crypto strategy. It's, you know, I guess it doesn't directly apply to the stock market, but um, just buying these lower price levels, and then, shifting once the market sort of corrects, then I mean, if you look every single time we get to a prior all-time high, the long-term holders start to sell to the retail market. It's why I say dumb money and smart money. Smart money, people that are like, people that are, real, we're talking like investors here. I'm not talking about like, again, I'm not talking about the guy, our friend that we know that's a long-term investor. I'm talking about guys that, that are market makers. They're buying at these levels and they're selling to the retail market in these levels. It's just how it is. That's why it's called dumb money, because who the hell wants to, you're taking on all the risk of crypto to make 3x. It's like, that doesn't make sense. That's why those guys are, they're acquiring in this level. And if they didn't know about the asset in this level, which is there's potential, or they didn't believe in it at this level, they just don't buy here. They just don't. They simply do not. They're not going to buy into a parabolic run. And the same goes for altcoins. Like if, let's say someone is, was not a crypto believer, and then they learn about crypto and they, really dive into it, and they're like, oh wow, yeah, this does seem revolutionary, but the price is right here. They're not going to buy. They're going to wait, because all of the evidence you possibly need is out there to show you that you're going to get your opportunity if you can just be patient. And I mean, it's playing out textbook like we would expect it to. Nothing interesting is happening here. We went on a parabolic run, bear market, some sideways chop, parabolic run, bear market looks like what we're heading into, and then we'll do, at least for some more time, we'll probably just do the same thing. I mean, literally nothing is interesting at all is happening here. It's only interesting if you make it complicated, and if you think you're the smartest guy in the room. If you think you're smarter than everyone else, or if you think you're smarter than the market and that you have solved it for some reason, which a lot of people out there do think that, and if you think that there's a defined trend and you have identified the situation where, you're going to be smarter than everyone and defeat this defined trend that we've seen play out repeatedly over and over and over and over again in the same exact way, and you think that now, oh, I'm some guy out here at my house, in my basement on my computer, but I figured it out. Okay. Good luck, bro. Like, you know, we're just seeing this thing that happens, at least in this market, and this may change at some point in the future. And I could, like I say all the time, this could be pie on my face, and I could be all wrong about what I'm saying. But we're just seeing exactly what we've seen happen in, a slight variation many times now. So there's simply no reason to expect, until proven otherwise, that this is somehow different. The only slight difference is the fact that we made an all-time high on this second run. But to that, I would say, well, yeah, we made an all-time high, but there was also an all-time high of liquidity just flowing in a overpumped market. It was artificial money. And so, we also went on a major dip because Elon Musk tweeted about Tesla. It's just like, okay, and I guess there's some other things, but that certainly contributed to it. Like China was all, and that's another thing that no one talks about. China getting, not being able, the citizens of China not being able to legally participate in this market, that's not a nothing thing. And people like to act like that doesn't mean anything. But okay, so you're taking, imagine taking 20% of the active participants, and mind you, becoming one of the wealthiest countries in the world in terms of, on aggregate, they may not be a wealthy country, but they have more millionaires and billionaires than, I don't know if it's more at this point, or rivaling the level of the number of millionaires and billionaires that the US has. And I believe it's more. You're taking them out of the market, completely removed from the market. That is, to me, something that sort of hurts the market in the long term, because you're taking a giant pool of wealth and simply ripping them out of the market completely. So that's another thing to consider that we don't talk about a lot. But it's just, I'm just kind of, just throwing these things out there that I think about. And um, I know I sound bearish as hell right now, but that's just because, the price is at $3,500. So I'm going to sit here and tell you what I'm thinking in terms of our downside risk. I do think there's a lot of upside, overall, there's a lot of upside potential in crypto. And um, I do think it's a revolutionary asset, evidenced by the fact that China banned it. They wouldn't ban it if it were, they didn't ban it because, they really hate digital currency. They banned it because, it challenges their ability to put control over their population via their monetary policy. So, that just, if nothing else, that shows you the absolute power that this asset has. So in that regard, I'm bullish, but I'm not going to sit here and talk about what, while the price is heading down to $36,000 and we're potentially heading into a bear market. I'm not going to sit here and talk about, all the reasons that I believe crypto is going to $100,000 today, because I don't think it is. I do think eventually, or, Bitcoin's going to $100,000. I think eventually we're going to get there, but you got to look at the macroeconomic level picture, which is what I always say. And quite honestly, it looks like crap right now. No, man, I don't need this channel, but quite honestly, I really, really enjoy it. Um, I work, I, like I said, I'm a physician, and I work, um, like what, like 12 days a month or something like that. And it's, I really enjoy crypto, and I enjoy, it's a hobby that all I've done is, transformed into something that I put on film. And it's because of the fact that, like I said in my video yesterday, there's so much crap on YouTube, like actual, and when I say crap, it kind of like pisses me off. It's like, it's crap that's dangerous. Like people that are deliberately lying to people so that they can make a few bucks off of it. And, there's always going to be con men, but that's kind of what I see a lot of it's tough to discern who believes what they're saying and, who is simply doing it. Maybe it's not that tough, but, there's a lot of people that maybe believe the stuff that they're saying, but that's just because they are the kind of people that, they're giving advice about things that they don't know anything about. They don't know anything about economics. They don't know anything about the history of markets. They don't know anything about, um, you know, lo- looking at fundamentals of projects and how things like this may be valued by institutional type investors. So they just take everything superficially, and anything that's good, they just repeat it back, or, anything that sounds good, they repeat it back and then, make it sound like it's the best thing in the world. And there's tons of that. There's just so much of that on YouTube. And, um, you know, I just felt like I could contribute something to the space and do it in like a measured and grounded way, in a way that a lot of people aren't willing to do. And, like I said, I don't make any money from this. In fact, trust me, this is, like I always say, this is the least profitable YouTube channel on on all of YouTube, or it's the least profitable crypto channel on all of YouTube, because I have all these different subscriptions that I buy, for things to provide information to you guys. But it's a hobby of mine. I really enjoy it, so I want to keep doing it for that reason. It's a double bottom, bro. 100,000 tomorrow. Yeah, I am gonna upload this. I'm gonna refine the forecast bars a little bit, which I actually already have. I just haven't saved it yet because I needed to fix one last thing, but I wanted to start the show. It also is going to fill in between these levels, and then you can change all the colors and all that crap. All right, guys, I'm gonna head out of here. So I'll probably do a video a little bit later today, though. So this was fun. I enjoyed this. I hope you guys all got something out of it. Um, so just before I head out, I'll just answer this. I have like one account on Ascendex or whatever it is, and I was saying I literally have like 0.1% of my portfolio value, and I'm not exaggerating. It's probably way less than 0.1%. So it's just something I do for fun every once in a while. But I haven't done any margin trading, and I don't even know when the last time was. I just do it whenever I remember. I'll go all in on something. And, I was saying, like, I'm going to Vegas this week, and, it's just a very similar way to blow money. So I don't do any serious margin trading, though. All right, thanks guys. I appreciate it. Truly do. All right, talk to you guys later. I don't know how to end the stream because it's so I think I should just hit this.